So, as we know, Indian investors for years have built their wealth largely within domestic markets. But as the years have gone by, they wanted to go outside and explore opportunities that lie outside Indian markets. Alongside this comes certain challenges and things that require a bit of understanding from an expert. So today, welcome to Cafe Mutual's YouTube channel. I'm Suhail Chagla and I'm joined by Saurabh Mukherjea, founder and CIO of Marcellus Investment Managers. Saurabh, welcome to the show. How are you?
Thank you. Thank you for inviting me. Thank you, Sahil. I'm good.
All right, Saurabh. So the first question I want to ask is something that's on everyone's mind. Given today's continued geopolitical uncertainty, how should investors approach today's equity markets, both in India's context and global markets?
I don't think today's circumstances are exceptional, Suhail. I think at any point in time, there is some form of global stress or the other. So if you take 2022, for instance, Russia attacked Ukraine. If you go back to 2020, we had to live through COVID, both 2020, 2021. Go back 2016, 17, the first trade war between Trump and China. Go back to 2013, 14, the southern European countries were blowing up because of financial stress. So there's some problem or the other. The way the smart investor deals with this is, rather than putting all his life savings in one country and then feverishly praying at the temple, that seems to be the approach a lot of people take, which is they put all their life savings in one country and then they go to the temple and pray feverishly. What the sensible investor does is he says, let me diversify across asset classes and across the world. So, for example, America plus Europe is 70% of global equity markets. And most sensible global investors would say Europe plus America should be at least half of my portfolio, right? India is 3% of global equity markets. Even if you're of Indian descent, you'll say, well, India should be at most half of my global equity portfolio. Just because I live in India doesn't mean India should be my entire equity portfolio, given that it is a tiny part of the global market. So diversifying globally allows you to deal with the inevitable blow-ups that will come from time to time, the conflicts, the financial system stresses, the economic cycles that will kick in. So if you are able to zig in some countries when you're zagging in other countries, then your zig and zag cancel out. So by diversifying my own money between India and America, between India, America, Europe, between gold and financial assets, I've been able to smoothen my compounding over the course of the last decade or so. And that's what I would suggest to those watching. Now, practical terms में, this was very hard to do until Gift City was created 5 years ago, and until the regulator there, the IFSCA, until they created a user-friendly, low-cost, tax-efficient regime. So practical terms way, it's only in the last 3 years that regular Indian middle class families, like my friends and family, have been able to diversify globally. But now that Gift City is there, now that global diversification in a cost efficient and tax efficient manner is available, I don't see any reason why every single person watching shouldn't be using Gift City to spread their wealth out. If you live in India, by all means, have a big chunk of your portfolio in India. In my case, I have half my equity portfolio in India, but the remaining half I have in developed markets, which account for 70-75% of the global market cap. In Saurabh Mukherjee's case, they're only 50% because I'm just setting out on my global diversification journey.
All right. Well explained. And Saurabh, I'd like to ask you about distributors now. As we know, mutual fund distributors are one of the main reasons that people invest. They make up a large sum of the overall investing population. They help bring them in. What are some opportunities for MFDs that they're kind of missing out today if they don't opt for global
Sure.
diversification for their clients?
So look, I mean, there's no two ways about it. The Indian MFD, the Indian mutual fund distributor, has been central to retail take up of the mutual fund product over the last decade or so, especially in the post-COVID era. In the post-COVID era, we're seeing every year 30 to 40 billion dollars of mutual fund inflows in India, and central to that success story is the mutual fund distributor's ability to persuade the retail investor कि boss पैसा डालो market में. But as I was saying, right, if you keep telling the distributor to put money in one market, right, just one market in a massive global economy, and that's actually a tiny market in the global context. If you just tell the distributor to put money in one market, you tell your client to put money in one market, you're needlessly making the client miss out on literally the whole world of opportunities. If the client misses out on a world of opportunities and India goes through 2 3 bad years, which is bound to happen in a decadal cycle, दो तीन खराब साल तो जाएंगे ही, you end up as a distributor seeing your client redeem at the worst possible juncture possible. Rather than having to live through such a bitter experience, you get your client to diversify globally. Very rarely does India and America get beaten up together. It's happened twice. It happened during Lehman Brothers and it happened during COVID. But in my career of 30 years, I've only seen two instances, 2 years out of 30, where India and America suffered in parallel. Usually, when India gets beaten up like 24-25, America is doing well, as happened in 24-25. Sometimes America gets beaten up. 2022, America got beaten up. The Indian market held up, right? So you go through these phases where kabhi India mein pitai, America mein kamai, kabhi America mein pitai, India mein kamai. But for you as a distributor, as an MFD, I think it's a no-brainer. Diversify your client's exposure globally. It gives your client greater continuity, greater stickiness, fewer sleepless nights for your client, fewer sleepless nights for you. And hey, the gift city regime, the IFSC regime is very distributor friendly. It's actually the IFSC regime for distributors as it currently stands is even friendlier than the SEBI regime for MFDs.
All right, got it. Now, speaking of something specific for distributors, what are some global trends right now that they should look at? Something that they should know.
I think increasingly what's happening is across the world, affluent people are saying, I want to save in the currency in which I'm spending. So if I look at myself in India, I'm talking to you using an imported laptop. It's a Microsoft Surface. My iPhone here, whilst it's made in Bangalore, as all of us know, there's hardly anything inside this Bangalore made iPhone, which is Indian. Tomorrow morning, I'll be taking a flight to Chennai. I think it's an Indigo, it's an Airbus plane, which is going to be imported. The crude oil inside it is, the aviation fuel inside it is imported. Almost every component inside that flight is imported. When I'm taking that Indigo flight, I'll be listening to a podcast on Spotify, which is also imported. So for most affluent people across the world, they like to save in the currency in which they're spending. In practical terms, most Indians are spending in dollars. Right? They might think they're buying this iPhone in BKC and paying in INR, but that's not really the case. If you're buying an iPhone in India, you're buying a plane ticket in India, you're effectively doing dollar expenditure. In my case, my bachas are also studying abroad, so that for me is explicitly a dollar item. Many of the MFD's clients will also want to send their kids abroad to study. That will be a dollar item. So if the Indian middle class, the upper middle class is like the globally affluent people, they'll say, yeah, I need to do dollar investing. Most of my outgoes in dollars. My investments proportionately should be in dollars. There's no point saving money in rupees and then seeing the currency depreciate 40% every decade to the dollar. Ultimately, since you have to spend in dollars anyway. So across the world, asset liability matching, where aapka kharcha, if your kharcha is in dollars, investors are increasingly saying, I want to invest in dollars as well, not in some other currency.
All right, understood. And are there any other common misconceptions that investors have about cross-border investment that you would like to clear up?
I think one perception I've seen in lots of places, and I think it's wildly misconceived, is that global investing is for rich people. This is for people live on Pedder Road or Altmount Road or Carmichael Road. Boss, I to live in the suburbs. This is not for me. That's absolutely untrue. As I said, courtesy Gift City, courtesy IFSC, which regulates Gift City, courtesy the reforms expedited in our parliament in New Delhi. Global investing is cost efficient, tax efficient. For as little as a few lakh rupees, you can start investing globally through Gift City funds. We've got one, but so have other people. There's multiple high quality fund providers in Gift City who will help you diversify globally. It's no longer the preserve of the rich. The Indian middle class is and will even more proactively diversify globally over the next decade.
All right. And speaking of your fund, you have the Global Compounders Fund that's been active for over 3 years now. About uh, how can it add value to prospective investors?
So Global Compounders started in October 22. So it's going to reach its fourth anniversary soon. And the way we conceived of it, and thankfully it's worked out, we said that, look, we don't want to buy the same things that a typical NASDAQ or S&P 500 index fund buys, which is they buy the Magnificent Seven, the big tech companies tend to be 50-60% of the weight of a Nasdaq index fund or a S&P 500 index fund. We said we'll have a little bit of the big stuff. We have around 20% of the portfolio is in the big stuff such as Microsoft, Amazon, Apple, and so on. But 75% of the portfolio is Western, European, American, Canadian, Taiwanese, small and mid cap companies who are compounding earnings at 18% dollar, more like 22% rupee. So these companies are not only compounding earnings 2 to 3 times faster than what's currently available in India, they're also half the PE multiple of Indian companies. So you're getting companies which are growing much faster. And I stress this is not just the big companies. It's not just that the only the Microsofts and the Apples and Amazons are growing very fast. They are, but they are big companies. But even the chota companies, even the companies that we are buying, which are small caps in Canada or Sweden or France or Holland, even the small caps, the mid caps over there are growing earnings in high teens in dollars, low 20s in rupees. And the valuations, as I said, are half of what are prevalent in India. So you as an Indian are getting to spread your wealth out across the world. You're investing in tech companies that define our ecosystem, such as the Microsoft Surface I'm using. Microsoft alone is bigger than the Indian stock market, grows thrice as fast as the Indian market, is cheaper than the Indian market. Similarly for an Apple, but you're also investing in things such as Amphenol. Amphenol is the sensors and connectors which go into a data center. Data centers, I'm sure everybody watching knows, the world needs 6x more data centers that are currently available. You're getting to benefit from, through global compounders, you're getting to benefit from the company that makes the chip inside your mobile phone. Everybody who's watching this video, you're using a chip made in TSMC's factory in Taiwan. Our global portfolio includes TSMC. Not only do we have TSMC, we also have the critical component supplier for TSMC's factory in Taiwan, right? So by investing in GCP, you're investing in the prosperity that has rippled through the planet. More specifically, you're investing in the companies that make your life possible. Companies like Airbus, companies like GE Aerospace, whose engines go into Airbus, companies like TSMC, which makes the chips that you use in your phone or laptop, or ASML, whose machines are used in TSMC's factories. So the world is your oyster. Gift City is your window to that world.
All right. And as the number of investors continue to utilize Gift City to increase their cross-border investments, how do you see it evolving in the next 5 to 10 years? What do you think the Indian participation in the global markets will be in the next decade?
So look, I think one simple way to think about it is till 2014, Indians used to hate the stock market. Till 2014, everybody and their uncle used to buy real estate and real estate almost exclusively. It took a 10-year period, 2014 to 2024. Basically, the NDA government gave the public confidence in the stock market. It took a 10-year period for mutual fund inflows, net flows into mutual funds. By the end of that 10th year, reached around 30-40 billion dollars a year. So we're sitting in 2026. I would dare say by 2035, we'll be seeing Indians not just put couple of $1 billion abroad. I think by 2035, we'll be seeing Indians invest in excess of $20 billion abroad each year. In the context of our country, that'll be a big deal. In the global investment context, that'll be a drop in the ocean because global stock market cap is around 130 trillion. So in the context of $130 trillion global stock market, our 20-30 billion dollars of Indian investments might not be big, but in the context of our own country's financial services ecosystem, 20-30 billion dollars of annual flows will be roughly 10x from where we are. And I'm pretty confident in the next 10 years, Indian investments abroad are going to go 10x comfortably over the next decade or so.
All right. So, Saurabh, as we know, Cafemutual's Beyond Border conference will be taking place on April 9th at the Ginger Hotel in Mumbai. I wanted to ask you, what do you think the insights or actionable takeaways will be from this event? You'll be speaking at it as well. And what type of person do you think should attend this event? It should be a seasoned advisor, a new entrant, or even new investors?
So I think both for mutual fund distributors, advisors, and for investors, I think the Cafe Mutual event will provide three benefits. Right, having attended such similar event with Cafe Mutual that was organized in Bangalore 3 months ago, I think there are three benefits that I got out of attending that event. Firstly, you get to understand from practitioners just how simple, how cost efficient, user friendly the Gift City regime is. The Gift City regime, has been built by the IFSCA over the last 5 years. But I think you need a practitioner to stand up in front of you and tell you how easy it is for investors and for distributors to operate in the Gift City regime. That's the first benefit. You get to understand the rules of the game, and the rules of the game are pretty simple. Somebody will stand in front of you and tell you as much. Second thing I think you get to understand is why bother with this? Why go global? Because otherwise वो होता है frog in the well mindset हो जाता है that I'm doing India is the world, India is doing really well, I'll carry on doing India. You understand from practitioners who've been investing globally for several years what are the benefits, financial benefits, tangible benefits to you of diversifying. There is no compromising on your returns do not get sacrificed, your volatility comes down. If anything, your returns get slightly better. On a risk adjusted basis, you make more money, which means you sleep better at night without compromising on your wealth. You need a practitioner to tell you that. And thirdly, you get to see the runners and riders, right? There is Marcellus operating in Gift City. There'll be other people who operate in Gift City. I'm sure they'll be present at the Cafe Mutual event as well. You get to put names to faces, faces to names. You get to meet the fund providers. This is a new ecosystem. These are not the same usual suspects who roam around the MF industry. There's a fresh bunch of fund providers who sprung up in Gift City. You get to meet them, chat with them over a cup of coffee, and hopefully get to invest in some of their funds in the years to come.
All right. Well, thanks, Saurabh, a lot. That was a great answer.
Thank you, sir.
And
Thank,
that's all the
thanks, Sohail.
questions I have today.
Fantastic.